Hard to believe 2025 is already in the books. And what a year it was. We had a pretty good year. All right, just curb your enthusiasm there. For many investors, it felt like one headline after another. Tariffs back in April. Yeah, the tariff trauma. Can't even remember that. New developments in artificial intelligence, AI. The passage of the one big, beautiful Bill Act. And yet, through all of it, markets marched to new record highs. And if you stayed invested, and if you're a client of mine, you stayed invested. You were rewarded again. All right, before we talk about what happened in the markets last year, I want to remind you of something far more important: the beliefs that guide every decision we make together. We are long-term, goal-focused, plan-driven investors. Our investment policy is rooted in your goals, not in guessing what the market will do next week, next quarter, or what the Fed might say or whisper next week. We don't believe any of that, and we don't believe anyone can consistently forecast the economy or time the markets. We've seen over and over that market reactions to events, whether elections, wars, or Fed meetings, are unpredictable and often temporary. That's why we stay invested in broadly diversified portfolios of quality companies, the best companies in America and from around the world. And we ride out the declines when they come because, no secret, they always come, but we're not hiding from them. History shows they've always been temporary. And as the late, great Charlie Munger once said, you may recall he was the business partner of Warren Buffett. He said, the first law of compounding is to never interrupt it unnecessarily. So, as long as your goals remain the same, our plan doesn't change, and neither should your portfolio, other than the regular rebalancing we do for you. Yeah, it was a strong year for investors, so let's talk about it a bit. 2025 marked the third straight year of double-digit gains in the U.S. stock market, something we haven't seen in quite some time. The Standard & Poor's 500 rose a touch past 16%. The Dow Jones Industrial Average, otherwise known as the Dow, advanced nearly 13%. The Nasdaq, largely powered by technology and AI-related stocks, surged a skosh more than 20%. And small caps, represented by the Russell 2000, also delivered double digits, rising nearly 13% on the year. Corporate earnings were strong, and profit margins climbed to their highest level in 15 years. Inflation stayed stubbornly around 3%, even as the Federal Reserve cut rates 6 times, lowering borrowing costs by a total of 1.75%. The one weak spot? Employment. The unemployment rate ticked up to about 4.7%, but that's been offset by strong productivity gains. Workers are producing more per hour, which lets companies raise pay without triggering higher inflation. More productive, I still refuse to use the self-checkout lanes in Publix. So, yeah, AI is not going to solve that one. I'm a denier, a self-checkout refusenik, a denier. And thanks to new tax policy changes, including higher standard deductions and increased SALT caps, the state and local tax caps, middle-class households are expected to see roughly $150 billion in refunds this tax season. Hey, in Florida, no issues with SALT, no state tax. But hey, it's really not that great here. You just stay where you are, okay? That's a short-term tailwind for the economy as we enter 2026. So, stocks rose, bonds rebounded, earnings climbed, and fears of recession faded further into the rearview mirror. Now, you probably didn't hear all that good news on TV, did you? The folks on CNBC or even FBN, were they talking about that? Well, maybe not. That's because financial media tends to focus on what's wrong. Yes, they need eyeballs, and bad news brings the eyeballs, and they can charge more for the ads. And what was wrong? Well, the softening jobs, the deficits, political drama, and so forth. But What really matters is what investors do with that information. And what do we do with it? We let it go in one ear, and out the other. We don't react to the crisis du jour. The lesson is the same one we've learned year after year. Stay disciplined, stay invested, and stay focused on what you can control. Yeah, of course, no recap of last year would be complete without mentioning the AI story, artificial intelligence. Big tech stocks grew even larger this past year, leading many to ask, are we in a bubble? Well, maybe. But remember, the valuation of those big companies by itself has never been a reliable market timing tool. So those predictions of a bubble, well, we consider those distractions. If anything, it reminds us why rebalancing is so important. And remember, we do that automatically for you. It's how we systematically trim what's grown too large and add to areas that haven't, keeping your portfolio aligned, balanced with your goals. And we don't do it based on emotions or headlines. And about that next stock market shock, yeah, it's always coming. They always show up when we least expect it, or at least the guys on TV are least expecting it. But the surprise will come from someplace, we don't even know what it was or is. Some unknown, as they like to say. And when it happens, we'll treat it the same way as before, as an opportunity, not a panic party. All right, we're going to top it off with what I call our investor's creed. And who's to say some of my clients aren't reciting this every night as they go to bed? It sums up everything we've talked about today, our philosophy in plain, personal language. So here we go. You can repeat after me if you choose. I am an investor, not a trader or a speculator. I don't do economic forecasting or market timing. The crisis du jour has no impact on my long-term goals. Financial media sells short-term advice. I follow long-term wisdom. I don't believe it's ever different this time. Techniques may change, but principles don't. And I believe in biblical principles. Hey, it's all God's anyway. I'm just called to manage the resources He's entrusted to me. And in all things, I aim to align my investments with my values, not the other way around. So here's to another year of patience, perseverance, and purpose-driven investing. In the meantime, I'll see you in the next episode.